Welcome to IG Trade in the Markets podcast. I'm Jeremy Naylor. We begin this week's offering with a bit of good news for those exposed to the commodity sector. Prices pretty much across the spectrum. Metals, energies, agriculturals, softs have all contributed to the best start to any month since the early 1960s, making the sector the best asset class to be exposed to. Let's look now at what's been happening and ask why, and the big one, can or will the rally continue? John Meyer joins us now from SP Angel. John's a mining analyst, so we'll be focusing mostly on the metals markets particularly. But John, welcome first of all. I want to begin, if we can, with the big picture question. What's going on at the moment that's caused this move?
There are a number of major factors that have prompted this rather sudden and somewhat unexpected move. I think the first and most significant factor is the surprise fall in US inflation, and that led the market to turn around really very dramatically. I think following that was a number of stimulus efforts in China addressing problems that they have there. I think that is a lesser factor right now because there are a lot of problems in China that need to be addressed and fixed. But for now, the market is really taking its cue from the US market and US interest rates, because the expectation now is that the US Federal Reserve won't have to raise rates so aggressively, and that caused the US dollar to weaken. And as soon as the US dollar weakens, all the commodities suddenly pick up a bit. So there's always a degree of short selling within commodity markets. I think the market was pretty short of many of these listed commodities anyway, and the short sellers just had to run for the hills and turn around. So it's more of a trading move than a fundamental move right now, because clearly there are problems with supply and demand in the world at the moment from a commodity perspective. But at the end of the day, we know that there's not enough commodities to go around, particularly when it comes to things like copper and nickel, over the next 10 years. And so there is this feeling that commodities are generally at some point going to have to go back up again.
Well, let's pick up on that point and now focus in on the metals, the sector for which you're most familiar. Explain a bit more about what's happening with copper, particularly. You mentioned about China's big push, and China, of course, is a big consumer of copper. Explain more about, first of all, what do we need copper for? But the second thing is that we're going to go, I believe, into this point about being in deficit. What could potentially happen to copper prices? But first on the immediate future.
What supported copper in the latter part of this week is the 16-point plan that came out of the Chinese government for rescuing and improving their property market. They have a number of major property companies with multi-billion-dollar loans, some of them hundreds of billions of dollars in debt, that have been building have been building millions of apartments across China. In fact, I worked out some numbers, and I guess that it was somewhere close to 3.5 million apartments that were unfinished. And there are all sorts of stories running around the markets about the state of this market. Clearly, there was several 100,000 people stopped paying their mortgages, because in China you start paying the mortgage before the property is finished. And unfortunately, these poor people were faced with the prospect of paying a mortgage, perhaps in some cases for years, without the prospect of being able to move into the apartment that they put their money down on. So that was causing problems. Now, the good thing is this 16-point plan from the Chinese government is getting this market going again. There's a whole series of, shall we say, slightly vague points within that plan. But at the end of the day, if you can get the property developers to start to finish these 3.5 million properties, whatever the number really is, I don't know, that will use a lot of copper in the cabling and the plumbing to start with, because you've got to get those bits in before you start to put in the soft furnishing, shall we say, and the kitchen appliances. There are a whole range of commodities that will have to be bought to transform into the appliances and the bits and pieces that have to go into these apartments. But first things first, copper for the plumbing, because PVC plastic pipes are not good for that. We know that copper is particularly effective at ensuring that you have virus-free water, for example, and clearly you need copper for domestic cabling as well, because who wants to move into an apartment that doesn't have any power in it? So yes, I'm sure they'll scrimp and scrape wherever they can, but there's an awful lot of property that will need to be finished, and the Chinese government is moving ahead on that. On the
And of
other
course,
side of the world, of course, the United States is very much in growth mode. Yes, inflation has pulled back, and that's a good sign, because that means the Fed will slow down its rate rises, and we expect construction and other sectors to start to ramp up production again in the US, having had a bit of a pullback. And again, I think that'll be a good demand driver for copper going forwards.
and of course, we then end up with a situation where we end up with too much demand, not enough supply. What can the world do about that? Is it just a question of opening up more mines? Should mines be more productive? Is there a better way to feed copper through into the market in a more efficient and more technologically driven way?
The market is reasonably well balanced. In fact, if anything, there may be a little bit of surplus copper and other metal going into LME warehouses, and some of that is due to sanctions on Russian metals producers. Everybody's really quite worried about, well, if they buy some metal that's been produced in China, are they then involved in some sort of, are they going to get hit by the sanctions people? But the market is reasonably well balanced in many of these things. There aren't huge piles of surpluses piling up around the place, and we can easily see that although the world has slowed down a bit, we can now see the world coming out of, I think, a post-COVID recession and still driving forwards. And remember that a lot of the new energy generation equipment, wind farms, solar farms, rely on copper for their cabling. The turbines use a lot of copper in the windings for the motors or the generators. Electric vehicles use twice as much copper as conventional vehicles. There's new demand coming through from these relatively new sources of demand. So the more windmills are going in, the more electric vehicles are produced. That means the more demand there is for copper, and that is just going up.
And I think I've seen in your release, which you send out to the market from SP Angel, that experts are forecasting a substantial deficit by what, 2030? Is that correct? If that's the case, what can we do to try and avert that?
We cover all of this on a daily basis. Wood Mackenzie bravely put out a forecast for a 10 million ton deficit in copper by 2030. We think that number's a bit big, frankly. Maybe that's just a headline grabbing figure, but yes, I mean, the experts in the copper market can't see where it's coming from, and we can't either. There are very few new copper mines in the world. We are trying to help a number of exploration companies pull the money together to drill more holes and define more copper resources in the world, in Zambia and Chile and places like that. But there's such long lead times to get these mines up and running, and such a lot of capital that has to be brought in to achieve that. We can see quite a significant disconnect between the two markets, between the discovery and the production.
Let's move on to take a look at another metal I know that you cover regularly, and that's nickel. If you strip out the problems that the market had a while back when it rose to extraordinary levels back in March this year. If you take out that, the recent rally that's been in nickel has been quite large. What's caused that? What's going on in the nickel market?
Nickel is always referred to as a wild beast of a metal, and the market was moved earlier this week by the prospect of the Indonesian government raising tariffs on nickel exports, and so this is seen as causing a degree of disruption in the nickel market, and prices moved higher on the back of that. In the back of my mind, I'm also thinking that when these Chinese property companies get round to finishing off these millions of apartments that remain unfinished. Nickel is important in stainless steel, and a lot of that, and a lot of stainless steel fittings are going to be required for fixtures and fittings in these apartments, not just the white goods as we call them, the dishwashers and the ovens and whatever, but the door handles and the bathroom equipment and all the bit. If you think of all the bits and pieces in a house or an office or something that are actually made of nickel, or where nickel is a significant component, which is essentially stainless steel, there is a lot of that, and that metal has to be bought in order to be transferred into or transformed into stainless steel and then into the door handles and other fittings that are required.
Nickel is one of these that's taken part in a substantial rise. I think nickel's up 38%, I believe, since the beginning of the month. We've already spoken about copper, which I think is up around about 15 or 16%. I want to check in on iron ore as well. Now, this is another one where we've seen some really big gains, almost 24% up from the beginning of November to where we are now. And I notice actually the market's still gaining today, where we got copper and nickel down today, just on a daily basis. Iron ore continues to rise. What's happening with the iron ore market? I mean, China's a big user of iron ore as well as everything else, of course.
Difficult to know really what's driving that at the moment, because China still has problems with property. I think, yes, with some of the stimulus, they are looking at restarting some of those larger government-sponsored infrastructure projects. I haven't seen anything specific on that, so I'm a little unsure where the demand is coming from. But iron ore prices had fallen down to about $80 a ton. Still big margins for BHP and Rio Tinto, though obviously nothing like what they were earning before. There are some rumored production cuts at steel mills within China, which has tempered the price rise recently. I think it's just it's more to do with logistics, where probably the steel mills had built up higher inventories, which were sitting at ports and various places in China. As they've run down those inventory levels, prices had fallen, and then they have to rebuild those back up again, depending on demand. So I think this is a market that's going to remain a little bit weak and possibly volatile for a while to come.
We've been looking at metals markets, base metals particularly. I just want to end up on gold if we can. It's always a metal that people always talk about. With the developments around digital currencies, some suggesting that gold has lost a little bit of its sparkle or luster, if you like, as a hedge against inflation. Whether or not that's true remains to be seen. But gold is up about 10, 11%, I think, since the beginning of the month. So it's enjoyed a nice little rally that's happened. What's the basis behind this? You started the interview talking about inflation and the fact that in the US, it looks like the back has been broken potentially because of the rises we've had in interest rates from the Federal Reserve from that aspect. But of course, the currency markets have moved a lot. If you look at gold and the price of sterling, for example, gold is not too far away from record highs. So it depends on which currency you look at it in, as indeed is the case across the entire commodity spectrum. But gold is interesting because it is also this idea of this safe haven play. What's happening with gold? Is there more potential upside for gold for those that are investing in that particular area of the market?
Gold's been in the eye of the storm for a little while, and when you're in the middle of a storm, you don't actually feel its full effect. Gold has always historically looked like an inflation hedge. It might not look like it right now, but I think when we look back at it in a year's time or 2 years' time, I think it will. And certainly, gold was driven higher or allowed to go higher on the prospect of lower rate rises in the US. That when the dollar pulled back, gold immediately jumped higher. It just does that. That's the way it trades. I think with problems in the cryptocurrency world, gold looks more attractive. I don't think anybody suddenly wants to be buying Bitcoin, or if you might want to buy it, but what exchange would you use right now? So cryptocurrencies are having a very tough time, and I think gold is a natural beneficiary of that, because it's always been an asset, for a safe haven asset, shall we say, especially if you're not quite sure where other currencies are going. So if you want to take your profits on the US dollar, but you're not sure where else you should put your money, gold is a good default asset class to move into. And I think this is what we're seeing. And yes, I'm quite optimistic that gold prices have probably seen their lows, and they should be rising here. And what we've seen in the past is that the trading range It has tested and gone through $2,000 an ounce a few times, or a couple of times in recent years. Probably this move is going to do that again.
John, I just want to finish up on one other area we haven't spoken about. We've spoken about individual metals and the sort of general moving commodities. But you and I have spoken before about this idea that battery metals are perhaps maybe the place to be. Do you still maintain that as the base case? Do you think that battery metals are likely to steal the limelight in the commodities space? We were hearing this morning from the budget, Jeremy Hunt, just talking to the House of Commons, and they're now talking about ways in which they can now reclaim money back from those with electric vehicles, which at the moment are road tax free. But I understand that from some years hence there is a plan now to start taxing people with electric vehicles. It seems to me as though whilst the idea of renewables is all very good, and at the outset there's all sorts of assisted plans and so forth to get people into using renewables and whatever, all of a sudden things turn around. Are battery metals still the place to be, or do you think their shine has left?
Absolutely, I think battery metals are the right place to be. There's so much demand for the new range of electric vehicles that are coming out. Yes, they are premium vehicles with premium prices, which will restrict demand to some degree. Much as I'd love to own a £70,000 car, I'm not about to run out and buy one today. And I'm sure a lot of people feel like that. But I do see some of these wonderful new models coming out from Ford, Volkswagen, BMW. They're beautiful cars. They run really well. They're luxury vehicles, and they're cheap to run because the efficiency of electricity straight into an electric motor from the batteries is really good. Even at today's electricity prices, they're still competitive. And yeah, I mean, that is the way the world is going. London is extending its ULEZ, ultra low emission zone. That means if that goes through, many more people in London are going to have to buy electric vehicles one way or another. They don't have to, but they'll be effectively forced into doing it. Those emissions policies are enormous drivers for the market. I just don't see that being turned around.
Okay, John, we'll leave it there, but thanks indeed for joining us. John Meyer joining us there from SP Angel, taking a look at the rise that we've seen in commodity prices over the last couple of weeks.